The information provided by Trading Forex Price Action to you does not constitute personal financial advice. The information provided is of a general nature only and does not take into account your individual objectives, financial situation, or needs. It should not be used, relied upon, or treated as a substitute for specific professional advice.
Midweek Analysis.
Hey guys, this is a midweek analysis for May 19th of 2021. Okay, we'll start out with the pound dollar. This is a monthly chart. We'll start off with an overview. Okay, so we had a weak double bottom right here. And since weak double bottoms typically do not go its target height, generally in this area right here, in the long term, I am short biased right back down to this pivot low right here. However, since there's a little bit of strength left in this double bottom, in the medium term, I'm long biased right up to this pivot high right here. And finally, since I'm waiting for the weekly chart to show some direction, in the short term, I am neutral biased. Alright, let's talk midweek price. Okay, this is a weekly chart. Now here's the setup I've been looking at for the past couple of months. So there was a strong short trade right here, and then a weak long trade form. So as price pulled back, I was looking for short trades right back down to this pivot low as a target, and that target's been hit right here. And at this point, I'm waiting for another weekly long trade to form so I could gauge its strength. And if this weekly long trade is stronger than this last short trade, then that's along with my medium term bias. So I'll take a long right up to this pivot high as a target. And on the other hand, if this long trade is weaker than this last short trade, then again, I'll just wait for a pullback up as far as possible so I could take a short right back down to that pivot low as a target. Okay, so that's the basic setup I'm looking at. However, there is a possibility where this weekly long trade does not form and price goes straight to our medium term target right up to this pivot high right here. Now in this scenario, the only way where price reaches this medium term target pivot high right here before making a weekly long trade is if the lower time frames price action is very strong long. So if on the 1 minute or 5 minute chart, if there's compact price action where the width between each peak is very small, if this forms, price will likely go straight to our medium term target at this pivot high right here. Now, since at this point, this compact price action is not forming, there's some intraday short trades I've been taking with the stop loss right up here, and its targets being at this level right here, here, and here. Now, let me go ahead and update those intraday trades for you. So let's go down to the daily chart. Okay, so if you recall last week, I took a short trade roughly in this area with the stop loss right at this pivot high. That was roughly 100 pip stop loss. Now, when price reached this area right here, if you recall, there was strong 1 minute long price action at this level, right at this horizontal daily and weekly level. And so I took out 50% of my position right here and brought down my stop loss, which was originally up here, right down to break even. So this week, price pulled back to stop out that break even stop loss at this level right here. So my entire position for last week's trade was pulled out at this point. Now furthermore, I took another intraday short trade yesterday, so let me explain that to you. Alright, I took another intraday short trade at this 1.4170 level, generally at this area right here, with the stop loss right at this pivot high as usual. However, the first target in this case will be this horizontal level right here, where I took out 50% of my position on my last short intraday trade. And then the second target being right here, and possibly the third one being right down here again. Now, the reason why I have tighter targets than the last intraday short trade is because that lower time frames long price action at this area was actually stronger than I expected. And that's the reason why I took this short entry at 41.70 right here, when price actually reached this 42.12 level up here. So since this pullback in this area was stronger than I expected, my first target will be minimized to a tighter target, which is right here at the area where the last strong long price action formed. Moreover, Since this long move right here on this pullback was stronger than I expected, I'm keenly watching the lower time frames price action. If there's any compact long price action on the 1 minute or 5 minute chart, I'll immediately abort my entire position even before price hits the stop loss level right up here. Okay, so for those of you that missed the last couple of forecasts, let me just show you what this 1 minute long price action looked like. So let's go over to the 1 minute chart. Alright, so on the 1 minute chart, if you look right here, this is a great example of compact long price action. You can see how the width between each pivot is very small. The peaks being these areas right here. Now this strong 1 minute long price action formed right on that horizontal daily level I was talking about. So that level is generally in this area right here. Okay, so from this point on, if I notice this type of price action on lower time frames, I will abort that intraday short trade I'm taking currently. Alright, so let's go back to the daily chart. Okay, now there's one last thing I want to talk about trade management, is that if you recall, the last intraday short trade I took was generally in this level with the stop loss up here. Now on this time's intraday short trade, I generally took a short trade right here, and that was a 70 pip stop loss. And I mentioned this before, but you want to remember in terms of trade management, the dollar amount of how much you trade should never really change. So in my case, I typically take a $1,000 to a $1,200 risk amount. And this dollar amount never changes. However, what does change from trade to trade is the lot sizes. So the last intraday trade I took right here had a stop loss of 100 pips. Thus, I only took a 1.2 lot position on that first intraday short trade right here. However, now that my stop loss for the second intraday short trade is 70 pips, I increased the lot size and I'm trading to 1.6 this time around. So although the dollar amount of how much I'm risking never changes, depending on the stop loss size, the lot sizes I trade changes in tandem. Okay, so let me just sum this up for you on the weekly chart. Alright, so the basic setup I'm looking at is for another long trade to form, and then I could gauge its strength to see if it's stronger or weaker than this last short trade, and then I'll decide if I'll be long biased or short biased. However, there's a possibility where this long trade may not form and price reaches that medium term target up here if on the lower time frames there's strong long price action, in other words compact price action. However, for the time being, since this compact price action did not form, I'm still expecting price to make this weekly long trade, and that is why I'm taking intraday short trades with a stop loss at this pivot high right here for the time being, with its first target right here and its ultimate target right down here for the time being. However, because of the price action right here that formed along with that horizontal level I was talking about, had a lot more strength long than I thought. I'm constantly watching the lower time frames price action for any strong long price action, in which case it forms, I would abort that intraday short trade altogether. Okay, alright, let's go on to the dollar yen. Okay, this is a monthly chart. We'll start off with an overview. So ultimately, I'm short biased right down to this 101 pivot low. But before that, we were talking about the pullback to 104, then to 109, and then down to this 101 pivot low target. So in the long term, I'm still short biased right back down to this pivot low right here. However, since I'm waiting for this long momentum to slow down a bit, in the medium term, I am neutral biased. Okay, let's talk midweek price. Alright, so as a refresher, the first sign of waning long momentum was 2 weekly red candles to form consecutively. And the reason why we wanted 2 weekly red candles to form is because this long trade right up to that 109 target was based on this weekly long trade to begin with. Okay, so we got that. Now let's go check out the second sign of waning long momentum, and that's on the monthly chart. Let's go over there. Okay, so on this monthly chart, try drawing this trend line from this pivot to this pivot right here. Now, since there was a breakout 2 months ago of this prominent monthly trend line, in terms of waning momentum, I wanted to see a failure of this long breakout and see price on the monthly chart break back into this monthly trend line, causing a failure of a breakout. Now, last month, we did not get that breakout back in at this level, So for the time being, I'm waiting to see if this month we could get a close back into this trend line. Okay, so that's a sign of waning momentum that I'm waiting to see if it'll form or not. All right, so the third sign is on the daily chart. So let's go over there. All right, so on the daily chart, the last long trade that formed was right here, and its stop loss being right here. Now, if you recall, this long trade was very strong, and thus, although I took a small position, I took targets very early. Now, what's been happening over the past couple of days is that there were many weak short trades that were forming against this strong long trade. So on this daily chart, the longs have an advantage in terms of strength. So the third sign of waning momentum will be that although there was a strong long trade right here and many weak short trades, if price could still pull back and stop out this long trade with the stop loss right here, that'll show to me that the weekly time frames bias is overpowering this daily chart's bias. Okay, so let me explain this to you in more detail. So we'll go over to the weekly chart. Okay, so on this weekly chart, like I mentioned earlier, this entire long move to 109 was based on this weekly long trade right here, with the stop loss being right here. Now it's possible that this weekly long trade already hit its target at 109. Thus, when trades targets are hit, price normally pulls right back down to its stop loss just to stop out the traders that are still long in this position. So if that daily long trade that formed generally in this level right here, with the stop loss right here, being that it is stronger than those daily short trades that were forming in this area, if that daily stop loss is still hit, although it's stronger long, that will tell me that this weekly chart's bias overpowered the daily chart's bias. In other words, this long trade's target is already hit and price is on its way back down to stop out the long traders that are still in this long trade, with the stop loss being right here. Okay, so let me take you back to the daily chart. Okay, so in terms of intraday trades, since on the daily chart, this long trade with the stop loss right at this level right here is stronger than the short trades at the moment. If price gives nice pullbacks close to the stop loss, minimizing my risk, I may take intraday long trades, again with very small targets. At the most, an intraday long target for me will be at this monthly level, so let me go show you that. Okay, so try drawing this trend line from this pivot to this pivot on this monthly chart. Alright, so for the time being, my maximum target for intraday trades long will be at this trend line level right here. Just keep in mind, since the weekly bias is indecisive at this point, if there's any strong short price action that forms near that daily long entry level, I will not be taking any intraday long trades either. Okay, so that's it for the midweek analysis. I hope you guys have a great week, guys, and thanks for watching. Okay, bye.